Hi, welcome to Government Accounting and Accounting for Nonprofit Organizations. Please watch and learn.
The government accounting process. The government accounting process comprises the activities of analyzing, recording, classifying, summarizing, and communicating transactions involving the receipt and disposition of government funds and property, and interpreting the results thereof. This process is similar to that of a business entity, except that it incorporates budgetary controls, such as recording in the budget registries and preparing periodic budget accountability reports. The books of accounts and registries of government entities consist of the following journals: 1. General journals. 2. Cash receipts journal. 3. Cash disbursements journal. 4. Check disbursements journal. Ledgers. 1. General ledgers. 2. Subsidiary ledgers. Registries. The following are types of registries. 1. Registries of revenue and other receipts, RROR. 2. Registry of appropriations and allotments, RAPAL. 3. Registries of allotments, obligations and disbursements, RARD. 4. Registries of budget, utilization and disbursements, RBUD. The 4 types of journals are: General journal, used to record transactions not recorded in the special journals. Cash receipts journal, used to record the report of collection and deposit and cash receipts register of collecting officers. These report of collections and deposits, RCD, are prepared by a collecting officer to report his/her collections and deposits to an authorized government depository bank, AGDB. The cash receipts register is used by field offices without a complete set of books to record their cash collections and deposits in the books of their mother unit. Cash disbursements journal, used to record the cash disbursements of the disbursing officer. Check disbursements journal, used to record the check disbursements of the disbursing officer. Ledgers. We have 1. General ledgers. It summarizes all transactions recorded in the journals. Accounts in the general ledger are arranged according to their sequence in the revised chart of accounts. 2. Subsidiary ledgers. It shows details of each control account in the general ledger. Budget registries. As we said a while ago, we have 4 registries that are being used by our government. The first is registries of revenue and other receipts, that is used to monitor the budgeted amounts, actual collections and remittances of revenue and other receipts. Second, the registry of appropriations and allotments, RAPAL. The registry of appropriations and allotments shall be maintained by national government agencies to monitor appropriations and allotments charged thereto. It shall show the original, supplemental and final budget for the year and all allotments received charged against the corresponding appropriation. This is to ensure that allotments will not exceed appropriations. Third, the registries of allotments, obligations and disbursements, ROD. This shall be maintained by the budget division/unit of agencies to record allotments received for the year, obligations incurred against the corresponding allotment, and actual disbursement made. The balance is extracted every time an entry is made to prevent incurrence of obligations in excess of allotment and overdraft in disbursements against obligations incurred. And fourth, the registries of budget, utilization and disbursements, RBUD. The registries of budget, utilization and disbursements, RBUD, shall be used to record the approved special budget and the corresponding utilizations and disbursements charged to retained income authorized under RA 8292 for SUCs and other retained income collection of a national government agency with similar authority, revolving funds and trust receipts custodial funds. It shall be maintained by legal authority, fund cluster, FOPAP and budget classification. Note: the COA shall keep the general accounts of the government and preserve the vouchers and other supporting documents. Object of expenditures: 1. Personnel services, PS. This pertain to all types of employee benefits. For example, salaries and wages, clothing or uniform allowance, personnel benefit contributions such as PAGVIG contributions, PhilHealth contributions, etc., and other personnel benefits such as pension benefits. 2. Maintenance and other operating expenses, MOE, pertain to various operating expenses other than employee benefits and financial expenses. It is the budget of the government to cover its day-to-day operations. These are expenses for supplies and materials, transportation and travel, utilities, water, power, etc., and the repairs, etc. 3. Financial expenses, FE, pertain to finance costs. These expenses refer to management supervision trusteeship fees, interest expenses, guarantee fees, bank charges, commitment fees and other financial charges incurred in owning or borrowing an asset property. 4. Capital outlays, company, or capital expenditures is commonly known as the budget for the construction and rehabilitation of roads, bridges, ports, airports, dams, public facilities, etc. It also includes budget for the purchase of motor vehicles, certain office equipment, information and communication technology equipment, and the like. Basic recordings. 1. Appropriation. An appropriation is an authorization pursuant to laws or other legislative enactment directing the payment of goods and services out of government funds under specified conditions or for specified purposes. The reason why there is a need for an appropriation law is because the Constitution restricts the use of public funds without a legislative enactment. The Constitution provides that no money shall be paid out of any public treasury or depository except in pursuance of an appropriation law or other specific statutory authority. An example of an appropriation law is a General Appropriations Act, GA, which is commonly known as the national budget. The national budget contains, among others, the budget of national government agencies for the payment of salaries, allowances and benefits of government officials and employees, the budget of the government for its day-to-day operations, and the budget of the government for its programs such as social and health services, and projects like roads, bridges, airports, dams, etc. In the local government units, LGUs, appropriation law is in the form of an appropriation ordinance. Just like in the national government, LGUs also spend their budget in almost the same manner. The receipt of the appropriation is posted, recorded, in the Registry of Appropriations and Allotments, RAPAL. 2. Allotment. In simple terms, an allotment is a chunk of an appropriation. If appropriation is a whole pizza, an allotment represents a slice or share of a government agency from the pizza. In technical terms, allotment is an authorization issued by the Department of Budget and Management, DBM, to an agency, through authority contained in the General Appropriations Act or the release of Special Allotment Release Order, SARO, permitting the agency to incur obligation and/or pay out funds within a specified period of time within the amount specified for the purpose indicated therein, unlike in previous years, where agencies can only enter into contract or incur obligation when the DBM issued their respective agency budget matrix, ABM. Now the GA already serves as the authority of government agencies to incur obligations, except for certain items in the GA that requires fulfillment of certain conditions before it can be released. What are allotment classes? There are four allotment classes. They are: 1. Personnel services, formerly called personal services. 2. Maintenance and other operating expenses, MOE. 3. Financial expenses, FE. And 4. Capital outlay. In summary, appropriation represents the level of authority given by the government to its agencies, specified in certain amount and purpose, usually corresponding to what has been proposed by the agency as its annual budget, while allotment represents the amount already released by the DBM to the agency out of the agency's appropriation. Whatever amount of appropriations that have not been released at the end of the year will be reported in the agency's books and registries as unreleased appropriations. 3. Obligation. A commitment by a government agency arising from an act of duly authorized official which binds the government to the immediate or eventual payment of a sum of money. Obligations shall be incurred through the issuance of Obligation Request and Status (ORS). The requesting officer shall prepare this document, supported by valid claim documents like disbursement vouchers, payrolls, purchase job orders, itinerary of travel, etc. The head of the requesting officer shall certify the necessity and legality of the obligation and the validity of the supporting documents. The head of the budget division shall certify the availability of the allotment. The obligations are recorded in the registries of allotments, obligations and disbursements, RARD. 4. Notice of cash allocations. Cash authority issued quarterly by the DBM to central, regional and provincial offices and operating units to cover the cash requirements of the agencies. The registries used to monitor the NCA are the Registry of Allotments and Notice of Cash Allocation, which are used to determine the amount of allotments not covered by NCA and to monitor the available balance of NCA, and the Registry of Allotment and Notice of Transfer of Allocation, which is used to determine the amount of allotments not covered by Notice of Transfer of Allocation. 5. Disbursements. It is the settlement of government obligations and/or accounts payable by cash. Movement of cash from the BTR or from an authorized disbursing officer to the final recipient. Disbursement is synonymous with liquidation, settlement, payment of an obligation. 6. Tax remittance advice, a serially numbered document that should be used by the NGAs in the remittance of withheld taxes on funds coming from DBM. This form is being attached to every withholding tax return filed as payment for taxes withheld. The Tax Remittance Advice, TRA, is used to recognize in the books of government agencies the constructive remittance of taxes withheld to the Bureau of Internal Revenue, BIR, or customs duties withheld to the Bureau of Customs, BOC, and the constructive receipt of notice of cash allocation for those taxes and customs duties. It is also used to recognize in the books of BIR and BOC the constructive receipt of tax revenue and customs duties, and in the books of Bureau of Treasury, BTR, the constructive receipt of taxes and customs duties remitted. The use of TRA is necessary in order for the BIR to record the taxes as its income and for the BTR to record the withholding agency's disbursement authority as subsidy. 7. Billings, collections and AMP. Remittances. PD Number 1445 requires that all collections must be remitted to the National Treasury, unless another law specifically allows otherwise. The billing of revenue is recorded in the General Journal, while the collection and remittance are recorded in the Cash Receipts Journal. 8. Reversion of unused notice of cash allocation, NCA. Government entities are required to revert any unused NCA at the end of the accounting period. The revised chart of accounts. A chart of accounts is a list of all the accounts used by an entity. Government entities shall use the account titles and account codes in the revised chart of accounts, RCA, issued by the COA. 1. The account group represents the account's classification as to assets, liabilities, equity, income and expenses. 2. The major account group represents classification within the account group. For example, for asset major accounts, cash and cash equivalents, investments, receivables, inventories, etc. 3. The submajor account group represents classification within the major group. For example, for cash and cash equivalents, cash on hand, cash in bank local currency, cash in bank foreign currency, etc. 4. The general ledger accounts represent the accounts to be presented in the detailed financial statements, for example, cash collecting officer, petty cash, etc. This is composed of 2 segments. The first 2 digits from the left is the general ledger code, and the last digit is reserved for contra accounts like allowance for impairment, accumulated depreciation, etc. That ends our lecture. Thank you for watching.